morning, traders, and welcome to Phoenix Blues YouTube morning update. My name is Nishal Patel, and I'm going to be giving you a synopsis of what's happening on the market and what happened yesterday, and what we're potentially looking at today. Today is Thursday, the 2nd of February. Hope you're all well this fine morning. First things first, just having a quick look at the key news announcements. Obviously, we had a lot of data coming out yesterday. In fact, we've got a lot of data coming out all week. Today really is very poignant for sterling. GBP, as we can see on our screen right now, has a huge amount of data coming out today. But in particular, the key one for us is probably the inflation report and the official bank rate. Now, it doesn't look as if we're going to have any movement whatsoever from the Bank of England on this, but keep your eyes glued to the screen. We're going to have a look at the charts in a moment, and we're going to put a relationship to some of the fundamental analysis to the technicals in a moment. We also have, just after midday, remember this is GMT times that are being displayed on our screen right now. Draghi is speaking. Remember that the ECB have already had a release earlier on in the week. And then we've got the governor of the Bank of England speaking again just after midday again, after all of those data, that spat of data coming out. And then we have the fortnightly unemployment claims coming out from the USD. So a lot's happening this morning. First things first, I think the best place to start is on cable, and cable right now floating at 1.2695, literally just breaking what I've got. Some of you may think that's a trend line. It's as good as its virtual trend line. What we have is a fib fan, just broken my 50% on this fib fan right now. Tested it yesterday on this daily time frame, as we can see, come up and bursted through it today. Remember, we have had some very strong data coming out from Britain, and definitely a push onto cable. But the downside here is the Brexit talks. The Parliament have voted in favour of moving ahead with triggering Brexit. It was a unanimous vote, very comprehensive from the ministers in Parliament, from the House of Commons yesterday. And we see, despite that talk, we're still seeing cable rocket off. Now, that is in no, let's not also forget the fact that the dollar has been selling off quite aggressively this week. Obviously, the main talking point for many people is the Trump policies and the political effects right now. The fundamentals really been weighed down by the political nature of talks, in particularly with potential policies coming up from Trump. Now, the Fed had a FOMC statement yesterday, and they never really gave too much indication to if there's going to be a further rate hike come March. So most people are probably looking that it's going to be coming in June, as we haven't had any indication that we may see anything in March. But that being said, it seems as if the FOMC are taking a very tactile approach to handling and seeing what effects Trump's policies will have on the market. Now, we've already seen over the course of this week, we've seen a huge effect of the policies, Trump's policies on the markets. Just having a quick look at the euro right now for today, floating at 1.080. Just sitting above that 100-day moving average on the chart we're observing, still making its ascent north and coming up to this long-term trend line again, that I've got drawn on here, to the top of this channel again, but most certainly taking out its previous highs. So we are in a situation where we are potentially looking at that reversal. So time to look for those reversal patterns and those signals, wherever they may be for yourself, and looking for the weakness in the dollar. We've obviously, after I would say 3 terms of the last 3 terms of presidents, or last 12 years of continued or steady dollar strength. It seems as if we've got a president in power right now that is not worried about the weakness in the dollar. In fact, he's asking for it. So are his ministers. Obviously, it will have a very good effect onto the competitive nature of the United States and its economy. They're trying to bring a lot more back into the country, which I'm sure already many of you already know because you're keeping up with the news. Big statements coming out earlier on in the week with the meetings with the pharmaceutical firms. Earnings reports out as well over the last fortnight or so onto the stock markets. There have been a mixed bag, and the stock markets are slightly mixed right now. Slightly lower than they probably would be after the initial pullback at the start of the week, but definitely again, policies from Trump are having a knock-on effect. And as we see here on the euro, after we had a fairly, we could call it a bearish day there, but after ADP figures and ISM figures came out yesterday afternoon, so yesterday morning session in the US and afternoon here in Europe, the ADP figures came out really positive, very strong, and ISM also were ISM figures were also very good out from the state side. That initially had given a bit of a rally onto the dollar. That's why it came down. Then what we did see is we saw some weakness coming into play, and as we see that very clearly on our euro chart. And if you go on to the rest of the majors and minors, I'm sure you'll see fit. Having a look at the yen right now, coming up, has tested that 114. I've got 113.91 as a horizontal level of resistance in this case. And right now sitting just above that 112.50 level, which is key for many traders. And as we can see, we're building into this formation of a trap. Down here onto the lows around that 112.50 area here. So we have the yen just floating just above that right now. Probably looking at non-farm tomorrow, and obviously let's not forget the other data that is going to be coming up over the course of today and tomorrow, which will have a knock-on effect onto the state of play. But with ADP figures the way they were yesterday, we'll probably expect some very strong numbers coming up from the actual non-farm coming out tomorrow afternoon. So probably may see some dollar strength, but I think that may be dulled down with the uncertainty of Trump's policies. Looking on forward, just having a quick look at the commodities, flying over to WTI right now. WTI is floating up at 54.13. That's on the daily time frame. Has come off that 52 and is still above that 52 area, despite the fact we did have data coming out with from crude inventories that were quite large yesterday. Did make a slight effect onto this chart, but as we can still see, the weakness in the dollar is still pushing this chart long. And going on to onto the next commodity, and I think it's going to be very evident on the state of play here. After pulling off taking out this low on gold, having this dip down, we're back up to its previous highs that we saw towards the third week of January, effectively coming up and kissing this 100-day moving average right now. Gold sitting very pretty at 112.16.97, almost 112.17, making its ascent, probably looking at a break above those highs. And remember, any weakness that we're going to get in the dollar here means that we will see gold start rising. But we do have some barriers in the way, some very strong levels or key levels en route. So please be wary of that. Again, what I would advise for many people is to stay away from the markets, observe them, and look for nice, clean entries come the start of next week. I think that may be favorable for most traders. For those aggressive intraday traders, well, collect those pips. If you have, let's say, the testicular fortitude to do so. If you don't, stay away, be safe. Until next time, guys, happy trading. This is Nishal Patel signing off. Bye-bye.